trades. Okay, so without any other, confirmation, right? So normally we have our strategy where we have first part of strategy one, momentum. We use the RSIs for that, right? 4 hour heading up, right? That's momentum to the upside. You're trading with the momentum, right? Then the next part of it is confirmation of volume. That's normally a 1 hour green moon. That just confirms that volume is at a level high enough to make 1.5 to 3% moves or trades possible, right? So now that we have those two things in there, then we go down to an entry process, right? Where the entry process is basically the volume on the lower time frames breaking the 10 threshold, showing that there's enough cash flow to move the trade 1.5 to 3%. Okay? That's our normal process. So what we're doing.
Yeah, like Doge right now, you got a 1 minute, 2 minute blue moon right now. We got a pullback going on at
Mm-hmm.
the moment. I
Yeah.
just looked at it.
See,
Yeah.
I didn't go. See, I don't. I didn't break down that far. I stopped at like the 10.
Yeah, yeah, you're fine. So
Oh,
here, so right now, right? So because I don't want, so Joey, stay on. So I want to get you on track here. Is like now
Yep.
let me show you what I mean by how we first got here. Okay,
Mm-hmm.
so all that we did was like last night we were tracking Doge. Okay, and
Mm-hmm.
we all we were waiting for at this time here was for the volume. Remember, so this is where we started with the orange line, right? So we have a 30-minute moon to the up, 30-minute, right? We have all this information, but there's no volume in this first section of these orange arrows, right? You following me?
Mm-hmm. Yeah.
Then what we did was we started to go, okay, well, let's start with the 2 minute just to find where volume actually starts to show up, right? So we're looking for breakouts here, right? So here's the 2 minute breaks the 10 threshold on that first arrow, right? But it doesn't return, right? It's supposed to bounce right there, but you can see that it just goes negative. So we're like, oh, not enough cash flow, and we start moving down. And the reason why there's not a lot of cash flow there is just because the RSIs are still heading down. But without having those extra confirmation, if we were just the only indicator we had was the moon indicator, right? And this is kind of where we can start is just looking at one indicator. And we start to go and we say, oh, it broke the 10 threshold again right here. But then it failed to bounce again. You see? So
Mm-hmm.
then we're waiting again. And finally here in this section, we get it to where it starts to like actually show some type of grit, right? It breaks the 10 threshold, it bounces, and it's starting to show that it has volume here. Okay, so now that the 2 minute has volume, now we can go down and say take a look at the 5 minute, right? Because the trade that we want is a 10-minute volume break. Okay, we need the 10 minute to have a volume breakup, right? So now that we kind of move to the 5 minute, you can see this is that box that we just put in here. So we have where it's starting to break up, and now we can see where the 5 minute is breaking the 10 threshold, and now it's starting to it hit the zero line, and now it broke the 10 threshold, right? So now it's starting to let us know, hey, there's some volume here, but it ends up going below. But here I'm going to turn this box green right here, so that now what I'm looking for is my 10-minute break, right? So if I go here and I look at my 10 minute, now that I'm seeing my 2 and my 5 actively getting aggressive, right? Now I go to my 10 minute and I say, remember the green box we just put right there? I'm looking for the 10 minute to break the 10 threshold. Now the reason why there's a possible 10 minute trade is because the 2 and the 5 are starting to show cash flow, right? Because they're breaking the 10 threshold and they're starting to hold above it. That makes sense?
Yeah.
Okay.
It's,
Now,
it's it's kind of starting to sound like, not to get confusing, but like I think like what Lucas was saying, like you get the frames, like everything's got to match up, like
mm-hmm, mm-hmm.
not the same thing but different. You know what I mean? But
Yeah, yeah.
make sure you got these before you jump to the new system, so everything's got to be pointing in the same way to base how you're going to make this trade. Because
Right,
I think
right.
that's what's confusing me too. Is like when the trade is entered, like sometimes people are doing like a trade that's lasting minutes or hours or sometimes it's days. So it's like I'm not under like
So
all the time frames are what jams me up because
yeah.
it's like I'm checking the floor and then this and then is it for like
So
now like
go here, right? So here's the thing, right? So we have a XRP trade that is a long hold, right? Where we're buying the dips at a very low leverage at a 5, 7, 10% leverage. But that's a position trade that we're going to hold until XRP breaks up to 225, 250, $3 or even $4, right?
right.
And you can tell it's a long position hold because we're doing a 7x leverage, right? Now, other times you'll see guys doing 3 to 5x leverage on a coin like the one Lucas just posted earlier, Rave, River. It's because they jump and have such maximum ups and downs that they have to use the lower leverage just because it moves so much, right? That it yeah. So, but most of the time when we're doing a trade, if it's not on a crazy jumping, normally we want to avoid those type of river and all those unless you have a method like Lucas and Ed and uh, um, Big Set has been really working out, right? Because they're focused on those coins, right? They have a step system in there, right? That's a separate, like we say, find your trade. They're finding their position in those very volatile coins where what you're focusing on is going to be just a coins that have moves but are consistent, and not so volatile, right? And this is where you'll see that our leverage stays consistent with 30 to 48%, right? 30 to 40, and they're normally going to hit within 10, 15 minutes or, an hour. And it all depends on when they pop up. If they pop up later at night, you're probably going to hold until 7 a.m., 9 o'clock in the morning for them to follow through, right? It all depends on the time. Normally, trades will hit a lot faster during the 9 a.m. New York time till 2 p.m., right? If we're later in the day and you get into a trade 7, 8, 9, 10, you might be running into an Asian market that has smaller volume right now, and it might take a little bit longer to hold. But the majority of the trades, like 80% of the trades, are 30 to 40x leverage, and we're looking to get them hit pretty quickly. And then it depends on which part of the trade you're in, right? And that's kind of what I'm explaining to you right now. The very first trade, right, and this is where to kind of like simplify it for you, right, is to just say, okay, if you're just using the moon indicator, right, not worrying about the momentum of the 4 hour, the 2 hour, the 1 hour being in your direction, right? Just focusing on how to read the moon indicator, which is really your entry indicator. Because if there's no volume, there's no entry. So
Right.
what we're focusing now on is what most people at the end of it can't figure out is, okay, where's my entry, right? So
Right.
this entry here, this is basically saying, okay, let me show you how to walk through 3 trades just with the moon indicator. And these are the 3 bounces that come when a trade first reverses, there's a bounce, then there's the wave 1 move, and then there's wave 3, right? So the bounce is what we're looking at here. So how it consists is this. The moment the volume on the 2 and the 5 start to show above the 10 threshold, that is a sign, right? Because we'll say, hey, Doge 5-minute moon line, right? And what you'll understand is that the 5-minute has just broke the 10 line, right? Doge 5-minute broke the 10 line. All they're really telling you in that post is that volume is starting to pick up to the long side. Doesn't mean it's going long. It just means that the the sells are finally wearing down and buyers are starting to win, right? And we could tell this by the volume. So right here, once I see someone post Doge 5-minute broke the 10 line, then I'm going to go to the 10-minute, right? because the trade I want to execute is the 10-minute breaking the 10 line, retesting, and start moving back up. I want to catch the momentum of the retest and the push up. Because remember, anytime that we get a signal to buy, anytime that we find an entry, we always buy the dip, right? So if we're focusing on longs and we get an entry play, we look for a pullback, a dip, but we buy the trade that goes against us, and then we ride up the next move, right? So for here, how this is manifesting, right? These steps are going to be the same steps on the 10-minute, the 30-minute, and the 45-minute, okay? First part of this step is breaking the 10 line right here. So on this box here, this green box represented when the 5-minute broke the 10 line, you see? So now that I looked at the 10-minute, because now that the 5-minute is telling me there's value, now I have to wait for the 10-minute to tell me there's a trade. And as time goes on, you can see this broke at 30, and by the time the 10-minute actually broke the threshold, right, it was 5 hours later. Right, what time was this? 40 minutes, 1, 2, 3, yeah. So we're talking 10, 20, 30, 40, 50, 60, 70. So this was literally 5 hours later. Because the 10 line broke on the 10-minute broke here, which was 5:50 in the morning. At midnight is when we got notified that there was a 5-minute breaking the 10 line. It's like 12:30 in the morning. Now, I'm waiting for this to happen. I'm waiting for the 10-minute to break the 10 line. You see what I'm saying?
Right.
When that happens, my trade is live, right? So my strategy for this, it's just a volume trade, right? So this is very simple. So strategy 1 on this trade here is just basically the 10-minute breaking the 10 line, right? That confirms momentum, right? That confirms value, right? Now, strategy 2, which is basically the entry for this, is simply going to be the pullback from the break, right? And it goes like this. And this will basically repeat itself. The only thing that'll change is the time frame, okay? So here we go. So once the 10-minute breaks, that is where we see here on the 10-minute, the 10 line breaks here. Once that happens, that confirms a live trade. What we need to happen now to make a trade out of this is that it has to go down and start to head back up. And we can see right here, it starts to pull down here, and then right here on this green arrow, it starts to pull up. See there? So even if you waited one more arrow to here, that would confirm that you now have a live trade, which is here. Because that was the entire trade. It was to break the 10 threshold, come back down, show support, and start with the momentum back to the upside. Right? So if you get that simple trade without looking at anything else, nothing else that you're looking at, you would have entered here on this candle, somewhere in here. Well, let's just say you entered on the next candle, right? Let's say up here. Now all you're doing is riding that momentum from this level here to your 1%, right? Which is somewhere in there. So it went a little bit higher than that. So you hit your 1% move there, right? That's your 30%. With this, we want to be running 30, like I said, 35 or 40% leverage. Probably 35, I would say, in this zone here. And it's just guaranteeing that when it does spike, we catch our 30%. So that's the first trade, okay? Trade number 1. That's the 10-minute trade right there. Now, how this, only thing that changes from this scenario here is this right here. The next thing that happens is we look for the 30-minute to do the same steps. So now I'm going to go here to the 30-minute line. And what we're doing is the same thing, right? So we've seen this trade already happen, right? So here's our trade that just hit right here. See it? Then there's a pullback. Now, what am I waiting for? I'm waiting for the 30 to break the 10 line. You see how it just broke the 10 line?
Mm-hmm.
Now, the next step is what? Let it pull back. Right?
Mm-hmm.
So here's your strategy. 30-minute breaks the 10 line. Strategy 2, pull back, which is your entry. Strategy 2 is your entry. Pull back from the break. Here's the pullback from the break. When it starts back up again, which is right here again, you can see it goes flat, it starts up. Even if you got the next one there and you needed extra confirmation, your entry would be somewhere in here. Okay? So now, there's the break of the 10 line on the 30-minute. Here's the pullback. Here's the upside, right? So it bends up there, which is your best entry. Here's your second entry here, which would be somewhere on this candle here. And that's it. Now, that's the second trade you're in. So we measure this out here. And we need a 1% move. And there we go. So then we hit it again right there. So we just hit our 1% move again, you see?
Mm-hmm.
So let me put that line in there because that should be... No, that's the 1%. So right there it hits again, right? Same exact thing. We didn't no other indicator, nothing else that I look at. The only thing that changed was that on the 10-minute, that was the first move. All that happened was the 10-minute broke the 10 line. When it did, I waited for a pullback from the break, right? Then heading up, entry. That's it. That was the entire thing. Breaks the 10 line, pullback comes, starts heading back up, there's the entry. That's the 10-minute. The same exact steps, we rinse and repeated, and we did it on the 30-minute, right? Same steps, just the next time frame. So now that that's over, right? That's that trade. We would have hit it right now, right? Now you would close out this trade because you hit it. So you're basically checking that off. That's your trade. The next time frame that we move to is the 45-minute. See right here? So the only thing that's going to change here is the time frame. So what do I need to happen? I need the 45-minute to break the 10 line.
Mm-hmm.
Which, what did it just do?
Yep.
So now I'm going to wait for it to have its pullback, right?
Mm-hmm.
When it then starts to head back up, somewhere over here, whatever.
So are you calculating the pullback when on the 10-minute? So you're letting it go down and waiting to see it curve back up? Is that what you're calling?
No, I'm staying on the same time frame.
Right. On 10 minutes. So you need to see it dip and then pull back up.
No, we're on the 45 now.
Oh.
Right? You see, we're on the 45. When
So we traded the 10 and now to get back in we're
we
jumping to
right,
45.
we traded the 10.
Gotcha.
Then we traded the 30, which just hit right there. See, we just tagged our 1% move right there. Now we're waiting for the same steps except on the 45. So I need the 45 to break the 10 like it did. It will then have a pullback somewhere in the next hour, 2, 3. I'll track this for you. And once
No,
it,
what I'm saying is, how are you calling? What are you calling the pullback? How do I know? If I'm looking at it by myself without you, how do I know when I'm at the pullback? Like, what's the definition of the pullback? I
oh,
guess is what I'm asking.
yeah. So here, let me go here. So this is the 10 minute. Okay. This is when the 10 minute first broke the 10 line. You see that?
Where you at?
The yellow. See the yellow arrow?
Oh yeah, okay.
That's
I'm
when it.
trying to follow the pointer.
Oh yeah, yeah. So once it broke the 10 line, right?
Okay.
Do you see where it started to head down?
You're still looking at the yellow, right?
No. So now what I'm doing. So here, I'll use the yellow arrows for that. So here. So then what I'm looking for is it to start to head down. You see how it heads down right there?
Right.
That's the down move right there. Now, when you're seeing it head down, right? It's heading down right there. Is it heading back up here?
I can't really see.
Are you on the phone or something like that? A smaller phone?
No, man. I got it all tonight. I got
You got the
the
PC?
iPhone, the iPad, I got the Dell, and I got the MacBook.
All right, so here it starts to head down, right? Here, it starts to go sideways a little, right? But neither one of those are heading up, right?
Correct.
Okay, then we come down here, right? Is this line heading up yet?
No.
No, right? Now we get to here. Is that line headed up yet?
Nah, still flat. Well,
Yeah.
Yeah, it is kind of heading
Yeah.
up.
It's heading up right there. Now you can wait to get confirmation and wait until that line hits.
That's the answer to my question, I guess.
Yeah.
So my confirmation would be when it starts to run up a little bit, but then when I lock in when it breaks the 10, that's like my super confirmation, I guess you could say.
Yeah. So we're right here when it breaks. As soon as it breaks the 10, and it actually has a solid double move down. You see how it like moves double down? You let that run down until you had a double move to the up. 1, 2.
Gotcha.
Right. So now.
And the moon indicator popped up saying the money's coming in, dude. You better jump in.
Yeah. The moon just that you're trading into that moon because when that moon hits,
Gotcha.
it's a spike. So now that we have that, let's move to the 30-minute, right? That's
so
the
now,
next.
on the moon indicators, like, what do those lines mean? Like the blue line. Like, what is that? What am I looking at there?
I mean, so that's momentum.
Okay.
So just like an
When
RSI.
it goes and it does like a check mark. Like, what's that about?
Like, what do you mean?
Like right there, right where, to your right a little bit.
This?
Right there. Yeah. See how it's like it's like flatlined and then bam, it jumps up.
Oh, that's because so that's where the volume had a spike, like what do they call it? Like an impulse. Yeah. Well, yeah.
Okay. Gotcha.
So that's normally when the most of the orders got filled at that time, and it triggered the moon. Right. There was enough down movement there to trigger the volume to say, okay, it's at a level where the amount of volume that is gone should trigger downward movement from here. It's not bullish anymore when it's blue.
Right.
Right.
So now to review real quick, when you were at the bottom there and you were looking for that line bending up, do you don't enter that right when you see it bending up, right? You wait for the green moon, or can you do that? But you risk it kind of going back down if there's no volume, right?
Yeah, I mean, I would wait for a double up, right? So if you're on the 2 lines up. So if it goes up on a 10-minute, right? And then it goes up the next 10 because if If you're on a 10-minute, that means the line's going to come every 10 minutes. It's like a candle.
Yeah.
So if you see it move up and you're like, okay, I think this is going up, and you wait for the next 10 minutes, right? You just say, oh, I got 3 minutes to the next candle. And then it hits and it shows it up again, then you can take that as confirmation.
Okay.
Yeah, because you're
And then
on the 30-minute right now, and like you said, like Joe's saying, when you see the curve coming up,
Mhm.
if you do the 2 jumps, the 1-2, the next jump is the moon. So would be
Right.
waiting for the green moon be like the super safe entry?
So I mean, yeah, that's definitely the super safe entry. Here's the 10-minute, right?
Right.
If you're waiting, so you want to trade into this moon, right?
Okay, got you.
Because when the moon crosses, that's where the big orders got filled. That's the impulse candle. So you want that spike, right? So the orange line is already letting you know that the spike's coming, right? You see here
Right.
it's heading down. Here it made its first move up. Here is confirmation to the upside. That's the second one. Just like here, you had confirmation of a down move, and then that second down move confirmed that it's heading down. Those are your
What
2
time of
moves.
the day is that on, out of curiosity, where it spiked up, where it meets its 2 peaks?
Over here?
No.
You're talking about originally here. So yeah, that spiked up in me. It was 5 o'clock in the morning. Heading in, so
market?
I would say, what time is it for you right now?
10:30.
Yeah, so this is 2, so this would be 7 o'clock your time, or 8 o'clock your time.
Like in the morning?
8 a.m. It's going. So this is New York time right here. This is the
Gotcha.
New York time.
So then when you want to do like a short, it'd be just the opposite. Or when you want to exit along, you just wait for the line to hit the top and then kind of bend down, correct, for the same amount of time.
Yeah, I mean, I would, for me, I would, once the 10 minutes starts down, I'd probably get out of a trade.
Yeah.
I would probably use a 5-minute blue moon or something.
Right.
So now that we said that, right? So check out what the blue moons are, and then that line spikes. That's like just right up, like shooting from the hip. That looks like the perfect like indicator that you're about to short, like for real.
You talking about right here, this blue moon?
Yeah, the blue moon, and then it has the line spikes up, and then bam, it has a massive drop, and then the next blue moon has that goofy spike, and then bam, a massive drop.
Mm-hmm. Yeah, because so this could be a short, right?
Mm-hmm.
But that would be so now so this is where you can add. You need more information for that, right? So this would be you playing into the volume being more negative, right? Or also, let's say the 4-hour RSI just started heading down, right? Or the 1 hour just started heading down, or you got a 1 hour blue moon, right? And then you get this type of move here, this spike, then you would short that move.
Yeah, that's what I'm saying.
Mm-hmm.
You see the blue moon, and if that spike comes, to me, like right now, it just looks like that's like, okay, dude, hop in. Like it's a no-brainer for a short.
Right. Now, the one thing I would say to that is this. I would say when you look at this move, right, here's a bottom move right here, right? This is wave 1.
Mm-hmm.
If you're going to short this, you should expect wave 2 to come in, right? If you were shorting, you would short the top of wave 3.
Yeah, I got you.
Right?
They get in a high. Yeah, I got you.
Yeah, because the first move down, right? The first of any move, right, is confirmation of the upcoming move. It's always going to bounce, and it's going to, right? Because remember, there's orders here, right? You have people who are buying, right? So just kind of like this right here showed you that there's a buy zone down here, okay? This up here showed you that there's a sell zone up here, right? Now, most people, when that happens, It's called a parallel channel. It's going to touch top and bottom until it breaks. It's until it until one of them wins. So when you see this first move to the upside, right? Just like any trade, that's what I say all the time. You're working on the third move, and this is what I mean by that. This is the first move. This is the second move. It's in response to the first move's action, right? Once that happens, you will then see the response to the continuation of that first move. First move hits sell signs, comes back down, gets more buy orders, pushes up again. Now, normally, after the third move makes its move, right? That is where you would get confirmation of the change of direction, right? So you wouldn't short this first move and then short that first blue moon, because that blue moon is the first move into the short, which means you would need it to go blue, green, blue.
Right.
You still need a reset, right? When you see a move that goes the direction you want, you then wait for the counter move to enter. Like when I say we're shorting, short the tops, right? Short the bounces. But what you need is the first move to happen. In this scenario, the first move for your short is the second move of the other move. It shows you that it has a pullback option, right? Starts to pull back. You get a blue moon. Now, if you're going to short this, you're going to want the blue moon to then you always want to enter the move that is against you. Meaning that if this is, you want to enter the move that would go against you. So if you enter this,
gotcha.
if you enter this blue moon here, you're entering the very first move, which more than likely will be countered by limit orders, right? Because what are we doing here? We're trading. So on a trading platform, there are a shitload of limit orders and a shitload of buy orders, like a minefield, right?
Right.
In order to get through the minefield, someone has to step on those mines. You know what I'm saying? Just like trying to break through anything. The first time you run through the wall, you don't run through the wall, you put a big hole in it. Then you got to back up and run through it again. Right? So when you see this first move to the short position and you want to short there, which is a good shorting spot, you're not going to short that first move down. You're going to short the reaction to that move. You want to see the minefield. And then when the minefield bounces up, then you take that next move and you go, oh, here's your move again right here, see? It's on this one, the second blue moon. That's the short you would take here. You see what I'm saying? Same spot, same setup, except after the first junction, right? So that's what, and this is where we'll figure out how to explain this in a way that everyone kind of gets it. You want to short the move that would go against you. When this decides to go short, which is a pullback, that's not a short, it's a pullback. It has to bounce. After it bounces and then finds itself in the same setup that you've seen earlier, then you can decide to take that into a short because you've already seen it go down, eat up orders, and bounce. And now the next time going through that same move, it should break through. That's why if you see it hit that same level and it bounces up again, people will go heavier on that third move because the third time is normally going to have a big breakthrough and a big move. Because it had to go through 3 times to get through. So all the orders.
What time frame?
Hmm?
And
There,
what
you
time
can
frame are you talking about?
no, you can use any time frame.
Okay, gotcha.
But you just want to be in, 10 minutes is like the if you're going long, 10 minutes is the lowest you really want to look at to find a trade. If you're going short, 10 minutes is about the same level there. But from there, they work the same way. That's what I'm showing you right now is the trade that we're going through. This is the same moves over and over. Okay? So right here. So right here, we're working a 10-minute trade, right? The volume breaks the 10 threshold. It then goes up. It starts to head down. Confirmation of the down is with two 10-minute down moves. That make sense?
Yeah.
When it finally goes blue and it starts to head down, it starts to head up. We have a one move to the upside here, and we have the second 10-minute move up. That confirms the upward move, okay? Which would be our entry. All right? Now, when we put that on the chart, here's our green arrow. This is where we would enter at this point, and we end up hitting our trade that we wanted, right? That's that one trade. Now,
Right.
your second blue moon is this right here. See up above? Right there? That is your short that you were talking about you would take. It does pull back. That's the 10-minute pullback, you see? There it is right there, that orange line. There's your pullback. Now, I don't want to talk about two different things because right here, what you're doing is executing volume trades to the long side, which works like this, right? So when we take this whole move, this is all broken down by this simple strategy here, right? It is a strategy, right? All on time frames, same moves. So first thing is we are doing the first move of the group. It's the 10-minute move. So on the 10-minute time frame, we need the 10-minute line, right? We need the 10-minute to break the 10-minute line, which it does, right? Then part two of this is simply the next part is the entry, right? So the 10-minute breaks the line. Now the strategy, part two of the strategy is, so strategy one is a live trade. 10-minute breaks the line, a live trade. Strategy two, what's our entry? The pullback from the break heading back up is our entry, right? So we watched it break. It made two lines down, two 10-minutes down, confirmed the down. Got a blue moon, double confirms the down. Then when it makes its move to the upside, it had a 10-minute, it went up. The next 10-minute heading up again, that confirms our entry. This is the green line, the green arrow. We take that entry. We get our 35, 40x leverage, 33, 35, probably about 35 on that. We hit our 1%. Boom. That's our entry. Done. The only thing we change here is once the 10-minute is done. Now, can you short the second 10-minute blue? Yeah. Because this is a bounce. There's nothing saying here that next move is going to come. It could just go into a complete short from here, right? So
Yeah.
you can short that second 10-minute blue move. All right? But for the long, right? Meaning the next long that we're going to do, we're going to repeat the same steps that we just did. The only thing that's going to change is the time frame. So now from 10 minutes, we go to 30 minutes, right? And what we're going to do here is the same exact thing, right? You can see here on the 30-minute, the 30-minute breaks the 10 threshold, right? And it breaks it right here. Once it breaks the 10 threshold, what do we need to happen? We need for it to start to head down. So here's the first move, it goes down. Here's confirmation that it's down. So it starts down, it confirms it goes down. Now, what do we need for it to do next? We need for it to confirm to the upside, right? So now we go over here, and now all that we're looking for is for the 30-minute to start to head up, right? You can see here, it starts to head up here, and then right here is the second 30-minute move to the upside, which creates this arrow right here. And I'm just going to turn this green like the other one. That's our next entry. Now, if we take that arrow and we do the same thing, we put it up here so that we can confirm our entry. It would be on this candle, which is basically this entry here. Does that make sense? So, 30-minute breaks the 10 threshold. 2 moves to the downside, 2 candles to the downside, right? Where the orange arrow, orange line is heading down. It confirms blue moon. It comes down. Now, when this happens, right? Remember, this is your first blue moon, right? It comes down, confirms blue moon. It starts to head up. 30-minute prints heading up. That's probably, with a 30-minute heading up, I'm probably taking in that first move. I'm probably getting in here, right? You want double confirmation? Wait for the second one. That puts you here, right? Doesn't matter, right? Because if you're going to wait for confirmation, right? So if I'm doing a 30x leverage, I take the first move up. If I'm doing a 40x leverage, I take the second move up. Because if you wait for confirmation, you have to increase your leverage. I'll say that again. If you take the first move up, you're 30x. If you take the second move up, you're 40x leverage. Why? Because if you wait for more confirmations, you have to increase your leverage to make up for your patience. That's why we have it. You increase leverage the longer you wait for confirmations because you're losing ground. So, you take that double move to the upside, you do a 40x leverage, you're in, and that makes its move. That goes 1%, that's this line right here. We hit our target again. Now, that target is hit, that is the 30-minute trade. Now we're going to move to the 45-minute trade. Nothing is changing here in our strategies and our entry except for the time frame. So now we go to 45-minute, which is the one we're tracking now. And what are we tracking here? We're tracking the 45-minute breaking the 10 threshold, which it did right there, correct? So now, what are we going to wait for? We're going to wait for a double 45-minute to the downside, right? And possibly, since this is the second blue moon, right? Second blue moon of the moon. Is it the 45-minute blue moon? Nah. This would be the first one. So you can't short this one. So the 10 threshold, the 45-minute threshold here, when this actually goes blue, this will be the first blue moon to the downside. But after that blue moon, the following blue moon, you could actually short. Okay? And I'm going to put this here so we can remember that, right? So, okay, shorting the second 45-minute blue moon. And that's just something we can have in our, we can go back and look, right? So I'm going to put this note way over here just because that's going to be way over there. But now, back to the trade that we're looking for.
I have a question. Second 45-minute blue moon from what?
After our trade. So right now you have a green moon, right? This is the first move. This is, guys, we're doing the same move over and over. It's just different time frames. So when this breaks the 10 threshold, which is happening, there will be a time that the 45-minute will head down with one move down and a second move down, confirming the 45 pullback, right? That will hit a blue moon, right? Now it could and it might not. We don't know yet. It might come down to where it might make a blue moon, and then start heading up at that level? We don't know yet. All I know is that at this point, right, what I'm looking for is once there's two arrows showing me the down slope, the next time that I get a 45-minute heading up, right, which somewhere in here, I'm going to get a 45-minute heading up at some point, right? That is going to give me my next green arrow entry, right? And I could do that with a 30x. If you're going to wait for the next 45-minute candle for confirmation, right? And let me kind of like put these here, and then I'll answer your question. Give me 1 second. So this is a 30x leverage. And then if you wait for the continuation, which is more confirmation, this is a 40x leverage. Okay? Because you're waiting for that extra 45-minute move to tell you that it's going up. So by losing that time, not wasting it, but being more cautious, you have to up your leverage to make up for your patience. Does that make sense?
Yeah.
Because most of your move has already kind of happened there. Now, as far as the short happens, I don't know if when this comes to a pullback and it does its downward move, I don't know whether or not you will get a blue moon on this pullback, like the 30-minute, like here, like the 10-minute here. You know what I'm saying? I don't know. It could come down and like look like it wants to do a blue moon, and then start heading back up, right? So it could come down halfway to here, and then start heading back up, creating an entry somewhere in this area here, but without a blue moon. See what I'm saying? But basically, the entry for the short is going to happen on the second blue moon from this point, right? And what I'll do here is I'll put a blue box so we can come back and see this. So from this point, we have no blue moon. Okay? But the second blue moon from this area will trigger a short position that we can review. But this one doesn't have it, right? But I want you guys to stay focused on the move, right? What are you doing? Now you did the 10-minute move, which was the 10 breaking the threshold, heading downwards, then started heading up. It did 2 moves to the upside. You entered. You did a 30x on the first move. You did a 40x on the second. You looked for a 1% move. We hit both of those. 10-minute done. We did a 30-minute. It went up above the 10 threshold. It came back down. It started back up. We entered again. Same scenario. Now we're on the 45-minute. It's going to push up. It's going to come down. And when it starts back up again, we're going to take our entries. Either a 30x or a 40x, depending on do we get the first move up or do we get the second move up. And we're going to go for 1%, and that's going to be our move. Now, that's the trade we're focused on. As far as the shorting, that's something we're going to have to like look at this play out, and we can go back and look at the double blue moons and then decide on which ones we want to short. But right now, this is just a simple process of doing a long volume trade with one indicator. One indicator. Just the moon indicator. And all it's showing us is when it breaks the 10 threshold, it pulls back for a retest, and it starts back up again, we take that second move up, the third move. First move, break the 10. Second move, pull down. Third move, head back up again. Right now, we're going to track the 45-minute, right? Now, I'm going to slide down the 1 hour real quick to see where that's at. You can see that the 1 hour is going to be in the same boat. It's going to play out with the 45-minute, just like the 10 and the 15 played out together. And that puts us where we're seeing all the bigger time frames starting to hit that threshold. You see? They're all starting to get to that 10 threshold, which means the 45 minute is normally going to play into the 1 hour and then the 2 hour. After that happens, right, the next possible trade that you will do is the 3 hour. Right? So you have the 10, the 30, 45, 3 hour. And that's the end of this trade. Those are all your momentum trades. And I don't right now with the market being in its condition, I don't know if we can do a 3 hour one. But the 45 minute should cover the 45 1 hour 2 hour move. And it looks like they're all hitting the 10 threshold right now. That makes sense? So all we're doing is using one indicator and doing volume trades. 10 minute, 30 minute, 45. Same strategy. The 10 minute has to break whatever time frame we're in, whether it's a 10, 30, or 45. The moon line has to be broken on the 10 threshold. We then wait for it to head back down. Once it starts to head back up, we take the entry, right? If we take it on the first move to the upside, 30x. We take it on the second move to the upside, 40x. We go for a 1% move, right? We're going for 30%. That's our target. That makes sense for you guys? That makes sense, Joey?
Yes, sir.
Like I said,
a little bit while
Yeah.
starting to click in.
yeah. I know you jumped on the short right away, but the short position is something we have to we got to build out.
Yeah. Well, no, I was just throwing it out there. Like it just like I said, that spike in the blue line caught my eye, and I was like, okay, bam, two spikes,
And
two identical patterns.
and here's
Like I said, I was just
and you have a short
now-
position there.
now it's going faster than my brain.
Yeah. No, you have a short position there, but the short position is only really going to play out on the first trade, like the 10 minute. Because the 10 minute is the first bounce of a reversal, right? Which basically when you think about it is the 10-minute trade when it bounces is really the first move, right? The next move that we're looking for would be the 30-minute, right? But since the 10-minute is the earliest bounce, it can continue down even way further. You know what I mean? Like that volume can disappear in a heartbeat. Because it's the weakest move. It's the earliest move. Right? It's like the early time frames are the weakest time frames. Now when you get to the 30 minute and it's showing volume on the 30, it has a little more juice to it. If the 45 minute is showing volume, then now shorts are kind of out the window because now you're in the middle of the push, right? The 45 minutes, 45 1 hour, 2 hour. That's the bulk of the strength. You don't want to short a moon in there because you're probably not going to get it. But we don't know until we see where the second 45 minute moon comes in. It could take it could be a while. But that first 10-minute moon, you can short that second blue moon because it will more than likely go back to where it first started. Because there's no big amount of volume backing it up. There's no 30-minute volume backing it up. There's no 1 hour volume back. You know what I'm saying? It's a very weak volume. So that I don't mind taking that, saying, hey, here's a 10-minute trade, short the second blue moon. Like that could be a basic trade. That has more probability of being successful because it's such an early trade that it can. At that point, there's not a lot of support in volume. You understand what I'm saying? When the 10-minute bounce comes, it's coming off of a short position, like a weak volume move. There's normally not a lot of volume in the market at that time. It's just bouncing from the limit orders that were put in at such low levels. That doesn't mean that there's actually volume there. It just means there's a bounce. So you can short that second 10-minute blue moon because that could end up in definitely retouching the first entry point or even breaking through that because those orders might have got filled and it could end up going even further, right? But when you get to the 30-minute trade, which is repeating the same steps, and now what you're going to see is the volume is starting to build a floor, right? And once a floor starts to get built, it's not going to go back and retest those lower levels because them orders, those sell orders and those orders, they've been filled. Now the orders that are winning are limit orders to go the other direction. You see what I'm saying? So you can short the 10-minute, but the 30 I wouldn't do because it's not an A trade. That's more like a B or C trade. It's already heading in the wrong direction, and by that time you probably got 2-hour RSIs, 4-hour RSIs heading up. Everything's changing in direction at that time. So that's not a trade I would short. I would do the 10-minute pullback short on the second blue moon. I wouldn't do it on the 30, and I wouldn't do it on the 45. Now, would I do it on the 3-hour? Yes. Because once I get to the 3-hour time frame, I'm now on the other spectrum of exhaustion, meaning that more than likely all the buy orders are probably filled. And we're probably heading into the top level of sell orders, which are going to start forcing it down. You see what I'm saying? So I would short the 10-minute bounce and then short the 3-hour because those are two different sides of the spectrum. It's the beginning of momentum where there's not a lot, and the 3-hour is the end of volume when it's exhausted. Those are the two that I would take advantage of, the double moons. And I put the note in there because I want to go back and show you guys that when those moons come in, how they don't respond like they normally would. It's because it's in the middle of the trade, right? Not enough certainty there. We want to trade exhaustion, and we want to trade exhaustion, the exhausted of selling and exhausted of buying. Those are the two levels, top and bottom. The 30, 45, that's in the middle. Now we want to trade trades that have higher probabilities. But we're going to track it because I want you guys to like see it. But on this particular day, I just wanted to get this to you guys so you can see as I go throughout the night, I'll be tracking this and posting this, right? So the easiest thing here for you guys to post and put on there are very simple. When you see a 2-minute, or a 5-minute volume break the 10 line on a coin, post it. 2-minute, 5-minute broke the 10 line on Solana. 2-minute, 5-minute broke the 10 line on River. 2-minute, 5-minute, you know what I'm saying? Then everyone knows.
Yeah, I missed that. I missed that part. You said post the 10 line breaks, whether they're
Yeah, 10 line breaks, 2-minute, 5 minutes.
2 and 5 minute.
Yeah, for the longs.
Okay.
To the upside. 2-minute, 5-minute. And then we know we can look into the 10-minute break. So, because what I want you guys to do is use just the moon indicator so that you can start, kind of reverse engineering here. So we've been working on, how to build a strategy for a trade, and we got that down. That's pretty much, it's the same shit over and over. The problem is the entry. So if you're going to get better at your entries, the only indicator we use for the entry is the moon indicator. So you need to get better, integrated with the moon indicator so you understand how to enter.
So
Basically
what you're saying is when you see a 2-minute 10 break, then you start looking for a 5-minute or a 5-minute 10 break.
Mm-hmm. And you post that one.
You see those two.
Yeah.
You post the 5-minute.
Yeah, because then everyone can look for the 10-minute.
Once you see those two and the 5-minute are broken to 10, then you start looking for the 10-minute to break, and when the 10 breaks, that's when you can get in.
Well, then you wait when you post. Then say, post your 5 minute so we know to look in case you end up doing
Yeah.
something else. And then when the 10 minute breaks, then the guy posts a 10 minute break, right? Because the entry is what? Here's the strategy right here. So when there's a 10 minute break, right? What's the next thing? Strategy one is to go live. So breaking of the 10 line is when the trade becomes live. Yo, what's up, XDC? So the next strategy is the entry. How do you enter it? So the 10 minute breaks the 10 line. What's the entry? Anybody? What's the entry?
What'd you say? 2 minute breaks at 10 minutes?
No. On any coin, the 10 minute time frame breaks the 10 line, the 10 threshold. What's your entry?
On the next bounce.
Explain it better.
So if it breaks the 10, then you basically have to wait for it to come back down and retouch the 10, and then.
Well, no, not. It doesn't have to retest the 10.
Oh.
It has to pull back.
Have to have a pullback.
Right. And your entry is after it has a double, two time frames, right? Moves
Right.
down, right? If you're on a 10 minute and it starts to move down, right? It'll show that it's heading down. That's the first 10 minute or whatever time frame. The second time it moves down, it's going to move down again, right? Once that happens, your entry is what?
Your green moon when the volume picks up.
No, that's the latest. That's the latest entry. It'll be on the second move up
From the pullback.
from the pullback. That's what those two arrows are.
So you'll see the first 10 line break, and then after you see that break, you wait for the pullback, and then after that pullback's done and it starts heading up, that's your entry.
On the right. If you take the first move to the upside, you're doing a 30x. If you wait for the second move, you're doing a 40x.
Okay.
So here's what we're waiting for on the 45, right? So right now, currently, we're waiting for this move to happen. We're waiting for the 45 to head down, which would be 2 moves to the downside.
Is there more in that group?
Once it becomes
There
2
will.
moves
What
to
is
the
the next?
upside,
Where's
that is our entry. 2 moves to the upside. If you take the first move to the upside, it's a 30x. If you take the second move to the upside, it's a 40x. If you take the green moon, like Lucas,
Yeah,
Lucas was
yesterday you
saying,
said I'm gonna add it to the watch list. So
it must have been under fine.
I don't know who's got their.
oh, Rand, you got to mute your mic, Rand. Now, if you wait, let's say you go full confirmation, right? So like Lucas said, green moon, right? If you're being patient, you have to adjust with leverage. Nothing wrong with waiting for the green moon. The problem is, if you wait for the green moon, right? Now you're in a situation where your leverage needs to be higher. So now you're shooting, you'd probably have to use a 50x.
Okay.
The
Yeah, 'cause
more,
you're missing like maybe a third of the move.
yeah, you might be missing more than that, but we don't know yet.
Yeah.
Right? I mean, this is why getting in here. But this is where you also have to understand it. This also teaches you that the more patient you are, right, for more confirmation, you know what I'm saying? You have to increase your leverage to make up for you waiting.
Right. But also, the more patience you have, the less drawdown you'll be in too, most likely.
Yeah, most likely. Yeah.
Yeah.
But that's why I say,
for a little bit.
yeah, you gotta play this. Now the next thing for you guys to do, right? Remember, you're reverse engineering. Right now, you're doing your entries, right? This is your entry trades. Now, once you do these trades, right, and we'll have different coins, coins will be different, right? Some coins you have to wait for the green moon because they're very volatile, right? You can't use that much leverage. Some coins you can use less leverage and they move even bigger, right? This is me just trading Doge. Now I'll trade Doge, I'll trade Solana. I mean, this is why when you guys post the coins, we can go track the trade and get the result. And then once we do that particular coin or that trade 10, 20 times, we'll know what we can do. We'll know the leverage we can push. We'll know when we can take advantage of it. You'll know whether or not the first move up hits every time. So you don't have to be patient. You can just go with the lower leverage, right? Or you'll know that you need to see a double move on certain coins to confirm the move is legit, right? But this is right now, this is where we get data.
Just had a 10-minute blue moon on Farcoin.
For coin. That's Lucas. That's Lucas, buddy.
Oh, hammered it. You know, I mean, just like BC saying, like, I started out going 53x, and I went to 44x, and then it was like, man, I can pull 50% all day. 33, that's my magic number. Well, you guys probably see I use 33x on that trade all the time.
Yeah.
Because it's safer,
so right now,
you know
Lucas,
what I mean? And,
Lucas,
yeah.
on this blue moon then, do you enter right on the blue moon, or do you wait?
I don't normally particularly short Farcoin myself. I long. I mean,
You wait for that.
that's a discussion for a whole nother time.
Yeah. Which you guys can have. Like, so for this video here, I'm going to stop this video here because I want you guys to, like, you know, the whole point here is you're doing a very simple volume. It's just the moon indicator. You're following very simple steps. You're watching time frames, 3 time frames break a 10 threshold. The 10-minute, the 30-minute, and the 45. Once they break their threshold and they pull down, you then enter on the next time they head up. Right? It doesn't get any more simpler than that shit. To post them.
One thing.
Go ahead.
Like right now, I mean, I got Bitcoin pulled up on one of my screens, and it does have a 10-minute blue moon. And if you are thinking, and like if you're trading Doge, for instance, or Solana or ETH, they're gonna run primarily close to what Bitcoin's doing. So if you think about going short, it's always good to look at what the 10-minute of Bitcoin's doing. Like you got a blue moon on the 10, most likely you're going to see Doge drop down some. Not a major drop. I mean, I'm not looking at all the charts on Doge right now closely, but I always keep an eye on Bitcoin. Just what it's doing when I'm trading what I call kind of the blue chip coins of the Doge, Solana, not the meme coins. You know.
Yeah, I was in my Doge earlier, and I got out of that in some good profits.
Yeah, and he's just saying like you can if you're kind of wondering what the like do a market analysis, take a look at Bitcoin's 10-minute, and then say, oh, okay, we're looking good, right? Or oh, actually this looks like we might get some pullbacks.
Right. I was watching Bitcoin making a possible double top, and that's when I decided just to get out of it because it was just kind of looking slow, and it is still kind of slow.
Yeah. I mean, right now, we're in Asian time, so it's this market from this time for the next 6 hours has been slow, right? But just so you guys so just to close out on that video that we got right now is, it's a very simple strategy. Post when you see 5 minutes break a threshold, and then someone else can also get on that coin. It might be an hour later, it could be 2 hours later. When you see the 10-minute break the threshold, that's the alert you definitely want to post a couple times. 10-minute breaking the threshold, waiting for the pullback, right? When that pullback happens and it starts to go the other direction, post your entry. 10-minute pullback done, entering long. Right?
Can you post like that one time you did for posting the RSI ups and the moons, you posted like a bear and like it was like a reminder for everybody of what to post. Can you post something like that for the 5 and the 10 minute, just so we can scroll up and it remind us to do that?
Yeah, I'll make a little thing for that. But we just want. I mean, for us, it's like the most important one to kind of post is the 10 minute. 10 minute breaks the threshold. So all 10 minute threshold breaks post. Then everyone knows they wait for the pullback, and it's done pulling back. We go to an entry.
Okay.
Then it's the 10
Yeah,
minute.
good.
All right, 10 minute,
Sometimes I wake
30 minute.
I wake up in the morning and look at my phone and I'm like, well, what the fuck was he saying last night? What do we got to post?
So it'll be 10, 30, and 45 minutes. So I'll make a thing for that. So anytime a 10 minute, 30 minute, or 45 minute breaks the 10 threshold, we post it. And then we just buy into the when it's done pulling back and starts to head back up, then we get into it. Right now, what you're seeing, if you look at Doge, we slide over, I guarantee you, look at the 45, you're seeing, okay, there you go. Look how it's starting to bend. See what I'm saying? There's your bend.
Yeah.
We know the pullback's coming. So if you were in a long position in Doge, more than likely right here, you'd be like, oh, this is going into that 45-minute long trade. I should close. Right? That's simple.
Yeah.
Now in this 45-minute, right, because it hasn't gone down yet, but it's showing the weakness. It's going to head down soon, probably in the next 45 minutes. The next 45-minute candle, I guarantee you, it will be down. Right? Then from there, we probably got about 4 or 5 hours, but we're going to get the move to the upside. And when it moves up, when it starts to head back up, that's the long position.
And then for the Discord, do you still want me posting the how to post video?
Yeah.
Okay.
And then I'm going to make the new banner. And so this way, because I want to focus on the volume trades, the 10, the 30, and the 45 postings for the next couple weeks, because I think, the biggest thing is like people getting into a trade when there's no volume. You know what I mean? So all I'm doing is eliminating all the other things that go with it, and just going, okay, if you're just focusing on the volume indicator right now, you cannot make a bad trade. Like if the if the 10 minutes not above the 10 threshold, why are you long?
Yeah.
It's that simple.
Here's another question. It's not related to what you were just talking about. But when you have, say, rewards,
Mm-hmm.